Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of business reports so you don't have to. Let's dive into this latest SEC filing and see if there are any hidden gems or maybe some not so hidden skeletons. We've got a big financial report here detailing the performance of the New Age Alpha funds. Trust, this is essentially a yearly update for investors, so we're going to cut through the jargon and focus on what really matters, particularly the numbers that show how these funds performed over the last year and even going back 10 years. So this filing is from the New Age Alpha Funds Trust, and it is for the period ending the 30th of September 2025. This form is a certified shareholder report, basically a yearly checkup on the funds managed by this trust. The main player here is the New Age Alpha Funds Trust, and it manages several different funds. It looks like there is an update to a previous filing. So the report from December of last year is being amended. The reason is some changes to reports from their accountants and the addition of a new report from Ernst & Young LLP. This might sound a little dry, but it is important because it can signal changes in how the company's finances are being handled. First up for the NIA allocation fund class, the cost of a $10,000 investment over the last year was about $155. That is a 145% cost, which is good to know if you are thinking about putting your money in. Now let's talk performance for the period from October 2024 to September 2025. The NIA allocation fund class actually returned 13.80%. That sounds pretty good, but it actually underperformed its main bench mark, the S&P 500 index, which saw a 17.60% return. It did, however, beat its other benchmarks, the blended allocation index, and the Morningstar moderately aggressive allocation category average. It is also crucial to note that on the 25th of October 2024, there was a big change. The Guggenheim Directional Allocation Fund merged into the Nadia Allocation Fund. So the performance numbers from the 1st of October to the 25th of October 2024 are from the predecessor fund managed by Guggenheim Investments, not the current management since taking over on the 25th of October. The fund underperformed the blended allocation index, but beat the Morningstar moderately aggressive allocation category. Their best performers included companies in materials, utilities, and industrials, but communication services, information technology, and financials, where a drag Broadcom Incorporated was the biggest winner, while Apple Incorporated was the biggest loser. Looking at the long-term performance over 10 years, we can see a clear picture. For example, the Nadia allocation fund itself grew from $10,000 in September 2015 to $28,792 by September 2025. That looks like solid growth, but when you compare it to the S&P 500 index, which went from $10,000 to $41,530 in the same period, the fund definitely lagged behind. Let's check out the average annual returns right now. The class of shares of the NIA allocation fund without a load had a 13.80% return over 1 year, a 12.28% return over 5 years, and an 11.15% return over 10 years. That is decent, but again, the S&P 500 index performed better in all those categories. The total net assets for this fund group were $193,505,973, with 138 portfolio holdings. When it came to what the funds invested in, a big chunk, 78.3%, was in common stocks, then 17.1% in corporate bonds and 4.1% in exchange-traded funds. The sector breakdown shows technology as the largest holding at 30.6%, followed by communications at 11.1% and consumer discretionary at 10.9%. And the top 10 holdings are dominated by tech giants. Nvidia Corporation is at the top with 6.5%, followed by Microsoft Corporation at 5.3% and Apple Incorporated at 5.0%. Now, for a significant shift, on the 3rd of December 2024, Ernst & Young LLP or EY resigned as the independent public accounting firm. For the funds, the audit committee then approved Cohen & Company Limited to take over. This is a key change that often signals a review of the company's financial health or internal controls. There were no stated disagreements with but a change like this is always worth noting. Moving on to the NADA Large Cap Value Fund class, for the same period, October 2024 to September 2025, it returned 8.82%. This also underperformed the S&P 500 index, which returned 17.60%, but it did beat its secondary benchmark, the S&P 500 Value Index, which returned 6.76%, similar to the allocation fund. A reorganization happened on the 25th of October 24 with the Guggenheim Large Cap Value Fund Merging into the NACA Large Cap Value Fund, the fund outperformed its secondary benchmark thanks to picking good stocks in information technology, industrials, and healthcare, but lost ground in communication services information technology, and financial CVS Health Corporation was a big contributor, while United Health Group Incorporated was the biggest drag. Looking at the 10-year growth for the NAJA Large Cap Value Fund, it went from $10,000 in September 2015 to $27,742 by September 2025. Again, solid growth, but significantly less than the S&P 500 index, which reached $41,530 in the same period. The average annual returns for class of shares without a load show 8.82% for 1 year, 15.10% for 5 years, and 10.74% for 10 years. The net assets for this fund are $7,134,0338, and it holds 102 portfolio positions. The investment mix here is heavily weighted towards common stocks at 98.9% and only 1.1% in exchange-traded funds. Sector Wise Technology is the largest slice at 23.2%, followed by financials and healthcare, both at 14.7%. Leading the holdings are Apple Incorporated at 7.8% and Microsoft Corporation at 7.0%. This fund also saw the auditor change from Ernst & Young LLP to Cohen & Company Limited on the 3rd of December 2024, with no specific disagreements noted now for the NADA Large Core Fund class. Its performance for the same period was 15.18%, still under performing the S&P 500 index, but it is a stronger return than the Large Cap Value Fund. They also underwent a reorganization on the 25th of October 2024 with the Guggenheim Style Plus. Large Core Fund merging into this one performance since taking over was impacted by security selection in financials, communication services, and healthcare, while materials, utilities, and real estate helped lift it up. Apple Incorporated was the biggest detractor and Broadcom Incorporated the biggest contributor. Over 10 years, the NIJAR Large Core Fund class grew from $10,000 to $37,770, which is actually quite strong, outperforming the S&P 500 index growth. During some of those earlier years, though, the S&P 500 pulled ahead significantly in the later years. The average annual returns for class of shares without a load are 15.18% for 1 year, 15.21% for 5 years, and 14.21% for 10 years. Fund statistics show net assets at $256,422,536 with 103 holdings. It is heavily invested in common stocks at 98.0% and exchange traded funds at 2.0%. Here, technology really stands out at 36.9%, followed by communications at 11.4%, and consumer discretionary at 9.2%. The top holdings are Nvidia Corporation at 8.1%, Microsoft Corporation at 6.7%, and Apple Incorporated at 6.2%. This fund also experienced the auditor change on the 3rd of December 2024. Next up, the NAA Mid-Growth Fund class saw a 5.70% return for the last year. This is significantly lower than the S&P 500 index return of 17.60%. This fund also had a reorganization on the 25th of October 2024 with the Guggenheim Style Plus. Mid-Growth Fund merging into it performance since then was affected by security selection in information technology, energy, and materials. While industrials, real estate, and consumer discretionary provided some positive contributions, Sarepta Therapeutics Incorporated was the biggest detractor. Comfort Systems Incorporated was the biggest contributor. Historically, looking at 10 years, the NADA Mid-Growth Fund class grew it from $10,000 to $28,537, outperforming many of its previous benchmarks, but still behind the S&P 500 indexes, $41,530. The average annual returns for class of shares without a load are 5.70% for 1 year, 8.64% for 5 years, and 11.06% for 10 years net. Assets are $72074,342. With 126 holdings, the asset weighting is 99.0% in common stocks and 1.0% in exchange traded funds. Sector Wise Industrials is the largest at 24.7%, technology is next at 17.7%, and financials at 14.4%. The top holdings are Comfort Systems Incorporated at 2.3%, MCOR Group Incorporated at 1.9%, and Interactive Brokers Group Incorporated Class A also at 1.9%. This fund also changed auditors on the 3rd of December 2024. Now, the NADA Opportunity Fund class delivered a rather disappointing return of negative 6.44% for the last year. This is a significant underperformance compared to the S&P 500 index's 17.60% and even the ICE BOFA 3. Monthus Treasury Bill Index, which returned 4.41%. This fund also saw a reorganization on the 25th of October 2024, with the Guggenheim Alpha Opportunity Fund merging into it, the explanation for the poor performance since taking over centers on security selection. The fund's strategy focuses on fundamental and industry factors, but security selection within those factors was negative. This is a real concern for investors. Looking back 10 years, this fund is an interesting case. It started with $10,000 and ended up with $12,693 in September 2025, which is actually a gain, but a very small one compared to the S&P 500 indexes, $41,530, and even the Treasury Bill Index, which grew to $12,301. The average annual returns for class of shares without a load show a negative 6.44% for 1 year, a 4.8%, 0% for 5 years, and a mere 2.41%. For 10 years, fund statistics show net assets of $35,002,991 and a surprisingly high for 12 portfolio holdings. The asset weighting is 65.9% in common stocks and 34.1% in US government and agencies, which explain some of the poor short-term performance. Almost all investments are in the United States at 81.3%. The biggest holding by far is United States Treasury Bill at 28.6%, followed by Southern Copper Corporation at 1.6%. This indicates a heavy lean towards safety and cash equivalents. Another order to change here, with Ernst & Young LLP resigning and Cohen and Company Limited stepping in on the 3rd of December 24 though. NADA Risk Managed Real Estate Fund Class, a return negative 1.40% for the last year. This is also a significant underperformance compared to the S&P 500 index, but it slightly outperformed its benchmark, the S&P United States REIT Index, which returned negative 1.99%. They had a reorganization on the 25th of October to merging with the Guggenheim Risk Managed Real Estate Fund. The performance explanation points to the allocation model and security selection. All three alpha sources contributed positively, but the overall result was still negative. Over 10 years, this fund started with $10,000 and ended with $20,408. This is decent growth, but again lags the S&P 500 index considerably. Average annual returns for class of shares without a load are negative 1.40% for 1 year, 7.32%, for 5 years, and 7.39% for 10 years net. Assets are $211,895,703. With 117 holdings, interestingly, the asset weighting shows common stocks at 111.8% and US government and agencies at 5.2%. This implies leverage or other complex financial instruments are in play. The sector breakdown is heavily skewed towards real estate at 90.4%, with US Treasury obligations at 4.2%, and other assets making up the rest. And once more, Ernst & Young LLP resigned, and Cohen and Company Limited was appointed on the 3rd of December 2024, the NADA SMID Cap Value Fund. Class. A returned 4.39% for the last year, underperforming the S&P 500 index significantly, but it did underperform its secondary benchmark, the S&P 1000 Value Index as well, which returned 6.28%. This fund also had a reorganization on the 25th of October, merging with the Guggenheim SMID Cap Value Fund performance. Since then lagged its target. Benchmark primarily due to security selection in energy and materials and being underweight in information technology. Bellring Brands Incorporated was the biggest detractor, while Resido Technologies Incorporated was the biggest contributor. Looking at the 10-year performance, the NADA SMID Cap Value Fund class grew from $10,000 to $25,435. It is outperforming its value index benchmark in some periods, but not keeping pace with the S&P 500. Average annual returns for class of shares without a load are 4.39% for 1 year, 13.65% for 5 years, and 9.78% for 10 years fund statistics. Show net assets of $3,055,96724. With 122 holdings, asset allocation is 98.9% in common stocks and 1.1% in exchange. Traded fund. The sector breakdown is interesting. Financials lead at 18.6%, industrials are next at 15.6%, and then technology at 6.4%. The holdings are quite diversified, with Resido Technologies Incorporated at 1.9%, Nextracker Incorporated Class A at 1.7%, and several others also around the 1.5 to 1.6% mark. This fund also saw the auditor change, with Ernst & Young LLP resigning and Cohen and Company Limited appointed on the 3rd of DCs. For 2024, the NADA World Equity Income Fund class returned 11.88% for the last year, underperforming its benchmark. The S&P Developed BMI, which returned 17.59%. This fund had a reorganization on the 8th of November 2024 with the Guggenheim World Equity Income Fund. Merging into it, performance since then was impacted by security selection in The United States, while Japan, Denmark, and Spain provided some positive contributions, Apple Incorporated was the biggest detractor and Broadcom Incorporated the biggest contributor. Over 10 years, this fund grew from $10,000 to $24,755, which is respectable, but again lags the S&P Developed BMI Index, which grew to $32,239. Average annual returns for class of shares without a load are 11.88% for 1 year, 12.41% for 5 years, and 9.49% for 10 years net. Assets are $47,332,260. With 177 holdings asset allocation is 98.5% common stocks and 1.5% exchange traded funds. The United States is the largest holding at 52.2%, followed by Japan at 10.8%, and then a scattering of European countries. The top holdings are Broadcom Incorporated at 7.4%, JP Morgan Chase & Company at 4.5%, and Siemens AG at 2.8%. And a final auditor change with Ernst & Young LLP resigning and Cohen & Company Limited appointed on the 3rd of December 2024. Now, let's talk about leadership changes, not directly in the operations, but in how the company's finances are overseen. Richard C. Butt has been identified as an audit committee financial expert, which is a good sign for accounting oversight regarding the code of ethics adopted by the registrant. It applies to key officers and promotes honest and ethical conduct, full and fair. Disclosure compliance with laws, prompt reporting of violations, and accountability. Importantly, there have been no amendments or waivers to this code of ethics during the reporting period for auditor fees in 2025. The audit fees were $161,500, tax fees were $30,500, and there were no audit related fees or other fees from all other fees were zero. This suggests a clear separation of services. The report also includes extensive financial statements and schedules of investments for each fund within the trust. We can see the detailed holdings and sector weightings, giving us a deeper picture of their investment strategies. For example, the NADE or Cash and Fund has a significant exposure to technology stocks like Nvidia, Apple, and Microsoft. The NADE Risk Managed Real Estate Fund, however, shows a very different picture with 90.4% in real estate holdings and a lot of exposure to REITs like Welltower Incorporated and Prologis Incorporated. This diversification across different fund types is a key feature of the trust itself. Also a section on subsequent events, noting the completion of several fund reorganizations, which is a common practice in the investment world to streamline operations or adapt to market changes. Finally, the report mentions the resignation of Ernst & Young LLP as the independent registered public accounting firm and the appointment of Cohen & Company Limited. This is standard for investment firms and suggests a normal rotation or change in auditor relationship. Now for my take on this whole filing, first off, the funds within the New Age Alpha funds. Trusts show a wide range of performance. Some, like the Large Core Fund, have had strong, long-term returns. Others, like the Opportunity Fund, have significantly underperformed their benchmarks. The auditor change is noteworthy, but given the report is from late 2025 and the change happened in December 2024, it is likely a routine transition or part of the reorganization process. It's good that there were no reported disagreements with the previous auditors. The financial tables paint a picture of a trust navigating different market conditions. While some funds have solid long-term growth, others are struggling to keep pace with broad market indices like the S&P 500. This highlights the importance of understanding each fund's specific strategy and risk profile. A key takeaway is the impact of reorganizations and mergers. The performance data before and after October 2024 needs careful consideration to understand the true impact of the new management. Overall, the trust offers a diverse range of funds with varying risk and return profiles. Investors should pay close attention to the specific fund's performance and its benchmarks, rather than relying on broad trust level statements. What do you think about these numbers and the direction of New Age Alpha Funds Trust? Let me know your thoughts in the comments below. If you found this deep dive helpful, please hit that like button and subscribe for more breakdowns like this. Don't forget to join our Discord community, linked in the description, for more discussions and insights. Thanks for watching, and hopefully we'll decode more corporate secrets together soon.